I was going through my text. It's been like several months. You reached out to me to put this together, so hats off to Anthony. Did a phenomenal job. So first things first, I'm not a guru. I'm just a guy that took action, and just a local guy from literally right across the bridge. It took me maybe 20 minutes to get here. I reside in Upper Manhattan. Oh, all right. I think you guys let me know if, it's a small room. But thank you, Anthony. Local guy, Upper Manhattan, got my start in investing in North Jersey, not too far from here, Patterson, New Jersey. But if you don't mind, I'd like to just share a little quick story with you. Is that all right? Yeah. So, we all have to start somewhere. We all have a story. There's a road that we get to, right? Someone shared with me the other day, knowing is not doing. And even then, right, there's a process that you're gonna have to get through to get from A to B. So this was over 10 years ago. I was working in the city, specifically in Jamaica, Queens, for a workforce development company, and doing that, and we getting through the recession, the last recession at that time. I remember we had a staff meeting. There was a lot of concern, and the VPs were like, "No, it's going to be all right. We don't foresee any changes, any downsizing." Anyway, I remember, never forget, it was like a warm spring afternoon. This was 2010. I come in. I'm at the facility at Jamaica, Queens. I said, "Hey, listen, so and so, Fabian. Hey, so and so's. They were looking for you." Looking for me. All right. So I go and I meet with the VP. Hey, listen, Fabian. You know how when you walk in and somebody is they have a serious look on their face and sitting down. Hey, listen, Fabian. I'm sorry. We're gonna do away with your position. You're gonna be downsized. So it was like got blindsided. So, I've never been an entrepreneur. I've always done it like the traditional route, going to school, getting a job, this and that. Heard about real estate, but never really took that lead, didn't really know. So now, downsized, not really knowing what to do, now spent, I was on unemployment for a while, but when you're used to working, you want to work. And so, took a bunch of months just putting out resumes, doing the online, applying and all that stuff. Nothing. Did a few other things too. I also have a background in coaching football at the high school and college level, was doing that, doing some odd jobs here and there, but still not really finding my footing. Until finally, I'd heard about real estate and real estate investing. And obviously, with real estate, when you think about real estate, the one of the big draws, right, is the possible profit potential, because you're transacting in properties, and there's always that potential. But also, as I found out, I've always enjoyed helping people. I've always enjoyed working with people and helping them. Have obviously for the workforce company, I was an instructor helping other adults transition back into the workforce, so forth. Also the coaching background. So I've always been that person that I like to help people, like to answer questions, so forth. And so I learned a few things about investing and wholesaling and fixing and flipping. Because real estate I think of real estate as like a broad super highway, and you have a lot of different lanes. There are many lanes, right? Obviously the assisted living, just within that, what Matt was talking about, there are various lanes in that. So real estate is very broad, right? There's some people that don't even touch properties. They invest in notes. They don't deal with people. They just buy the paper, so to speak. So there are many lanes, but I wasn't really sure. I had self-limiting beliefs. Wasn't really sure how to get started. I want to get in investing, because I also, being downsized, it's like your power stripped from you. And now it's like, damn, man, somebody could just call you into their office and, take you down. You know what I'm saying? With just completely blindsided. So now I'm looking at this real estate space and I'm wondering, what can I do? How can I fit in here? So I wasn't really sure. So I took a lower barrier of entry. I became an agent, was a real estate agent licensed in New York, working, serving the rental communities out there in Upper Manhattan, did some sales as well. was working for a small local agency out there and helping people. A lot of my work was just on the phone. No, listen, Mary, with a 650 credit score, that landlord's they're not even going to look at your application. Like, I'm just keeping it real with you. Like, so a lot of that, it was that, because people want to, no, but I make 90,000. Yeah, it doesn't matter. They want certain things. So a lot of it is educating people too. So now doing that, so now if you don't mind, I'll tell you another story. So here I am, this is 2017, I'm working as an agent. I have a pocket listing. A pocket listing is kind of like a listing that you have that a lot of people don't have. It was myself and another agent had it. It was a house up in the Bronx, apartment up in the Bronx, and this lead contacts me, a gentleman. Hey, listen, I'd like to see this apartment up here that you got in Wakefield. Great. All right, can you meet in about a half hour? Sure. So I jump on I'm driving. I jump on the Cross Bronx, and if you know New York here on the Cross Bronx, there's a lane when you veer over to take the Deegan, the major Deegan Expressway. So I'm there, and, a little bit of traffic, and then all of a sudden, I get rear-ended. And luckily I'm okay, but the impact pushes me into the car in front of me too. It wasn't severe damage, but nevertheless it's a crash. It's like shit. You know what I'm saying? You're not waking up expecting to get crashed into. So luckily I'm all right. I think my first call after I assessed that I was okay, the airbag didn't go off, I was all right, but before I called my insurance carrier, I called the client. Hey, listen, I was just in an accident on the Deegan. I'm on my way. Oh, well, how long are you gonna be? Because we're here now. Listen, I just got into an accident. Give me a few minutes. I'm okay, by the way. Just give me a few minutes. So I pull over. We do the whole pictures, exchange information. You know what I mean? I think the person that hit me was on their phone, but whatever. I'll leave that to another day. Anyway, we were all right. The car was still drivable, so I was like, now, so I'm transitioning from being an employee to now as an agent. You're an entrepreneur in a sense. It's eat what you kill. So I'm okay. Let me get over here and get to this appointment, because if you don't do a deal, you don't eat. You know what I'm saying? So that's how it is. That's how it is in that business. So I pulled off, and I called. Hey, listen, sir, so-and-so, you still there? No, we left. We don't like that area. Listen, all right. Keep it calm. So now, all right, listen, well, what about over here? So I show him an apartment in Inwood, which is a northern area of Manhattan. Didn't work out. Long story short, didn't work out. Meantime, here driving around with the rear of the car is all crunched in. Ended up being totaled anyway. The manufacturer's like, nah, it's totaled. That damage is worth more than the car. So my point is, that story illustrated another teachable moment, is that if you can learn and build yourself up, build your skill set, and develop a business where you can be more in control of the outcomes, that's what you want to do. Because now I went from, okay, have a job, being downsized, okay, now, again, remember what I said a few minutes ago, I wanted to get into investing, but I wasn't really sure, I didn't know how, I didn't have the capital, wasn't sure, how do I go about this, like, where do I go? I'm hearing about this wholesaling stuff, where do I go, where do I start, I wasn't sure. And there was a lot of hurdles that I was putting in front of myself. So, like I said, took the lower barrier of entry, became an agent, and I mean, nothing wrong with that, but you're also, if you're just doing that, and again, I'm not knocking it, but if you're just doing that as an agent, you're at the mercy of clients. You don't get clients, and then also the deal that you do, you got to hit off the broker, right? So you're like kind of, the broker's kind of like the pimp. You know what I'm saying? So the broker's got to get paid. Now I know now there's EXP and there's a lot of creative things, so forth. Cool, I didn't know about that. I was in a small agency. Like, it is what it is. But I'm grateful for all of it. I'm definitely grateful for all of it. So now that experience with that client showed me, damn man, there's no love, there's no loyalty. But it is what it is. You learn from it. So now fast forward, it really showed me, all right, what I'm doing, it's getting me to a certain point, but it's not enough. So I'm gonna need to get better, right? Because, if I'm a firm believer, and I've learned this the hard way, the results that we have is based on, you know, what we've gotten. It's based on what we've done to that point, right? It's not just gonna fall out of the sky. So now I take the lead, and now I start to make it a point, get out to more networking events, not just in New York City, but also North Jersey, because knowing too, around this time too, I was trying to collab with other investors, wholesalers. Hey, listen, you know, are you looking for deals? Yeah, all right, let me see what I can do. Let me maybe connect and kind of be a middleman, kind of be like a broker. This investor's looking for 3 units. Maybe I know this wholesaler, you know, and maybe I can connect the dots, so forth. So just trying to do that, getting out to networking events in North Jersey, and also because the price points in the city is just not happening. It's a different animal over there. So why not come to a market maybe a little bit more affordable? So now eventually that's not really working much at all either, because also you're again not really in control of it. Till finally at one of these networking events in North Jersey, someone tells me about a particular investor who's based in Paterson, New Jersey, has a really growing portfolio. So I start, you know, on Instagram just connecting, reaching out, start connecting with people, start connecting with players, right? When we want to do something in particular, you want to get around the people that are in that space. So for example, if I know I want to get into assisted living, so forth, in that niche of real estate, then I want to be talking as much as possible to Anthony, to Matt, so forth. If you want to get into flips is your thing, you want to get around people that are doing flips, right? So now I start getting around people that are doing deals, getting around not just realtors who are investor friendly, who work with investors. A lot of them are investors, you know what I'm saying? So they wear as you know, a lot of people wear multiple hats. So now you start getting out around those people and broadening your horizons and learning, all right? Now I start learning specific things, right? And also it drew me to Paterson, New Jersey, because while I heard, damn, it's dangerous in Paterson, New Jersey, and this and that. But like anything, just same as up in Manhattan, there are pockets, there are areas that are a little bit better than others. And also the price points are better. So a couple things real quick. There's something called tertiary market, right? You have a primary market, like in New York City, right, Miami. You have secondary markets that are maybe a little bit smaller. You have tertiary markets. I consider Paterson a tertiary market to, for example, New York City. It's similar to New York City in many ways, but it's a lot smaller. It's also a little bit, you know, it's also more affordable in some respects. So, and also, I believe if you're gonna get into investing, the time, because I was gonna roll up my sleeves and get involved in it. You don't want to be too far away. You're gonna get involved in it. You want to be able to get there as soon as possible. So for me, Paterson, you know, not speed. I don't speed, but you know, maybe about 30 minutes. You know what I mean? Maybe a little less than that. So now I start learning from realtors, other investors, picking their brain, going to their conferences, so forth, and just getting that knowledge. And now you take that knowledge. Now, what did I do right after that? Did I just sit? And who can guess? What did I do after getting certain knowledge from these guys, these investors, these realtors, so forth? What do you think was the next step?
Take action.
You gotta take action. And that meant for me, hey, listen, D, so let me know, right? I'm gonna hit you up on Monday. It's Sunday now. I'm gonna hit you up tomorrow. Let me know what deals you got. What can I go see? And I was back in Paterson, learning the areas, seeing 3 units, seeing 4 units, seeing 2 units. Like anything, it's a numbers game, right? I mean, God bless. You may hit something right away. God bless. Chances are it's gonna, because as you're looking at properties, whatever kind of property you're thinking about getting, whether it's for rental, whether it's for assisted living, you want to convert it, whether it's a flip, you have to look at a lot of properties. Why? Because you want to really find out what you can stomach, what works for you. Some people will walk into a property, oh my God, there's piss, there's all this stuff, there's a squatter there, I can't deal with this. Like, you may not have the stomach for that. You may need to go more where, well, over here, okay, I just need some paint it needs a little bit of this, you know, the bathroom is old, right? Maybe that's what you can stomach. Maybe the pricing. Maybe the price is what is considered cheap in Hackensack is different from, you know, if you go to Edison. You know, it really depends. You have to, as an investor, how many brand new to investing or looking to get in? Is everyone here fairly experienced? A couple new people, great. So as you start your journey, you want to find out what can I do? What am I looking to do? And also looking at your resources. So when I was starting out, I got in contact with a relative of mine who had some capital he wanted to put to work. I didn't have the capital, but I had the time. I was ready to put in the sweat equity. He had the capital, so that's how we teamed up. And you know, he helped me with the down payment, so forth, and the initial rehab, so forth. And that's how you do it. Instead of thinking of, you know, what you don't have, think about what you do have, and who can you get around, and who can you partner with, right? And instead of, you know, thinking, you know, I'm gonna get this whole pie. Well, hey, listen, how can I start off just getting started and share in that pie, and everybody can win. So now we start looking at these properties, start seeing, okay, well, these price points. I remember the first it was a 3-unit in Patterson, and the rehab was like, oh, contractor came back, it was like, the quote was like $200,000. Yeah, we're not doing that. I'm gonna pass on that one. You know, because it just wasn't right for me. But it's a numbers game, so you keep doing it. I remember there was a listed property that I was taking a look at, and that same realtor that had been helping me out, he came because when you're new, you want to get experienced eyes on that property that you're looking at. If you're not experienced, you want to get experienced eyes. So if I'm going to look at a property for a particular, let's say, assisted living facility, and if Anthony can come and take a look and help me, because he would know what to look at and how we can make that property work, because my eyes are not trained in that way. My eyes are more trained straight multifamily, residential, and also commercial. I'll call him because those experienced eyes are going to help me a lot more. So don't be afraid to ask for help. Don't be afraid, whether it's your friend who's a GC, who's a general contractor, whether it's a realtor friend. So anyway, we're in this property. The investor broker was taking a look. It's like, oh, he was pointing out some things. Hey, listen, all right, you know what, I'm going to show you something. Follow me. So I get in, I follow him to another property in Patterson. It was an abandoned 2-family property. Decent block, not too, you know, these areas. The other thing too is you want to find out what the area is like. I would recommend, as a new investor, stay away from really hot areas, meaning problem areas. Because unless you're a deep-pocketed investor with resources, you don't want to be battling. Someone said something that makes a lot of sense. You could manage a property. I could manage that property. I can't manage an area. So if there's a lot of craziness going around in the area, if you're a beginner, if you don't have the resources, stay away. Because you're going to be getting calls. Hey, they broke in. Hey, they did that. Hey, they're dealing. They're playing music till 3 in the morning out front. It's a lot of fucking headaches that, you know what I mean? Again, you got to look at yourself. What can you stomach? What can you tackle? And I'm giving it to you straight because my experience was investing in the inner city. A lot of people don't talk about this. There's certain realities you got to deal with in the inner cities. And a lot of times, these are these pockets where you may also be able to find reasonably priced deals. You know, so this is what it is. So, but I'm used to it to an extent. But you don't want to get, you know, I'm from the Heights, so I know what it is. I know the Bronx. So Patterson doesn't really scare me. But I got to also think, as an investor, will depending on that block, depending on what's happening, can I attract a tenant there, right? Because I can't go over there. It's crazy over there. You know what I mean? So you got to think that way as well. So we pull up to this 2-family property, Patterson, and it was off market, right? We had just came from seeing an on market property, so a lot of eyes on it. At all times, you want to try to see off market property as best as possible. Nothing new under the sun, but it's less eyes on it. So we took a look at this 2-family house. It was a moderate rehab job. It wasn't too crazy. there was a squatter in there. We had to deal with that. It's fine. But we pulled the trigger on it. I just get right to it. We pulled the trigger on it. It was like, paid like $160 for it. You know what I mean? So, and that was our first project. That was our first project. We got it cleaned up, the rehab, you know. So I just want to share a couple quick things with you. You know, in terms of, because I'm speaking to you as for those that are interested in residential multifamily, like that beginner, starting out, getting something, creating an asset, building up an asset that can make you some extra money. Maybe you're going to develop a portfolio out of it. Maybe you're going to, you know, eventually sell it and move on to something else, which is what we did as well. But you want to find that property. You want to find that property that works for you. That works for you based on your resources, based on what you can stomach, right? If it's got fire damage and you don't want to deal with that, it's fine, pass. If it's something maybe it already has tenants in it, that's another ball of kind of another area to deal with. You know, this property that we bought, it was completely vacant. Sometimes if it has existing tenants, you got to think about that. Like, you're coming in kind of on their turf. You got to be ready. Hey, listen, I'm the new sheriff in town. We got to lay out the new foundation. I know the past landlord, they let you do this and this. This is how it is now. So it's certain things you learn with time, right? So you got to really look at it like, what can you stomach? What can you deal with? And what can you grow into? You know what I'm saying? It's okay if, you know, especially if you have people helping you, to take that leap and do something a little bit more, right? So finding the deal, right? Finding the deal that works for you. You have to build a team. You have to get a team around you. So when I entered that Patterson market, and not just a realtor, I also started networking with contractors, attorneys, all these other people that are either in or near Patterson. Why? Because you have to know the lay of the land. You gotta know, hey, listen, what are the rental laws in Patterson? It's different from Newark. It's different from Clifton. It's different from Teaneck, right? We need to know, like, what's going on there. What are the procedures, right? Where's the office that I go to file the permits and all these things, right? So you want to know that stuff. So and the team is going to help you. There was a point where I would get deals, and there was a GC that was helping us. I would send them, you know, hey, what do you think about this address? Oh no, man, it's hood. It's too crazy over there. All right, I pass. If he's telling me he's from there, there's no need to go, because again, you have to do what works best for you. You're in it to build a business, to provide, you know, and I was coming from it. I really wanted to provide affordable, quality housing. That's still my lane, is quality, affordable housing, because the numbers, and Matt was talking about that we all need a place to live. That affordable housing piece, more than ever, is critical, because for those that don't know, you know, this is an educated room, but I'm sure you do. We're at a housing shortage I think it's like 5 million units. We have a serious housing shortage in this country, and the problem is that even the new construction to build is just way too expensive. So now you're seeing a lot of people taking even a single family house, and they're renting the rooms, they're converting, they're doing ALF, they're doing, you know, there are other target communities where there's sober living, so forth. The housing is a problem, and unfortunately, I mean, I was talking to Matt before, you know, I mean, JP Morgan just laid off a bunch of people. Excuse me, Apple just laid off a bunch of people. So we're seeing a lot more potential problems down the pipe. Hopefully, you know, we who are landlords, you know, hopefully we're not going to get those calls that, you know, people are going to be late on their rent and so forth, because people are getting squeezed from here and from there. People are getting squeezed. So affordable housing is at a premium. So that's the space that I work in, really. So now, again, finding the deal that works for you. Getting along with that, kind of like a point A under that is, you have to build a team. You have to build a team that's in that market or near that market and knows that market, because each market is a little bit different, right? Then after that, construction. Once you get the deal, you bought it, you closed, great. Construction. right? And you want to make sure when we bought that property in Patterson, I was project managing it. I'm not a builder, but I was there. I took off my hat as an agent in New York, and I said all my fucking focus is going on this in Patterson, New Jersey, because I had a hard money loan and my name was on the line, right? Because you guarantee that loan, right? And they make sure they send you the email, hey, listen, Fabian, you let the insurance carrier know they need to put, because they make sure the insurance carrier has to put the hard money, the lender's information on there, because if something happens, they're part of that claim as well, right? Or if I skate off, if I leave, they're getting that property. So the lender never loses, but the lender is also your partner, right? So now all my focus went to Patterson, and I was there. I was involved in putting together that scope of work. I was involved, hey, John, how are we looking there? When are we done on that first phase? Next Friday, okay, let me know, all right. Because I was managing, right, doing the construction drawings, all that stuff. Construction is very important. So we get through that construction. That took about 3 months. You never pay a contractor all the money either. Don't pay them all the money. I held back, I think it was like $5,000-$6,000 until they were completely done. Even though they were at like 90, you could call it like 95%, hold back some money, because contractors kind of, oh yeah, we're done. Let's go work on this, because they're getting their money. I get it, but you guys are not completely done here, so I'm going to hold back some of that money. That's just a side note. Never pay contractors all the money until they finished everything. Be upfront. Keep receipts too. Lender's going to want to see that, right? So now we do that whole process. Now, management, which involves leasing, right? And again, I'm talking to you from the aspect of a rental property. So you got the property, you bought it, you went through the rehab. Whether you're involved, whether you know or not, you need to be involved. Don't disappear for a couple weeks. Stay on it. Hey, listen, Eric, what's going on? I'm at the property. You guys are not here. Oh yeah, we got pulled to something else. You guys gotta let me know, man, because we're on a schedule. I call it being professionally persistent. Being professionally persistent. Make sure, because when you got a hard money loan, the clock is ticking. The clock is ticking. We had the loan. It was for 9 months, but I wasn't trying to take 9 months. I was trying to get out of that thing as quickly as possible, because you're paying interest every month. So you got to make sure you take care of that. So now after construction is done, management, which involves leasing. And again, I took my experience as an agent. I also reached out to the realtor that helped us get the property. Hey, listen, the 2 units are done, they're rehab. What do you think we can get for it, all this stuff, right? Again, using your team. Once you have your team, leverage them. Hey, D, what do you think? What do you think we can get for these units? There were two bedrooms, plus there was a finished basement and a finished attic. So we're trying to figure it out, because now you got to see, right, what can work here, right? So I had him helping me, but I was like, again, going back, it's my name on the dotted line. All my focus is on Patterson, because this is what I really want to do. I got my shot. Now I'm in the ring. Now I got my shot. I got to make it work. So I rolled up my sleeves, did advertising, good old sign in the window. It was a busy block. Got a lot of, for rent sign, got a lot of calls off that, and just hustle. Just hustle. You can do it. Many of you that are here, you've done it already, I'm sure, in whatever lane that you're in within real estate, and that's what it is. So we got tenants, ironically, both tenants from the Bronx. So just go figure. Just again, people are getting squeezed. People are trying to, because even if people work in New York or they study in New York, Patterson is kind of it's a hop and a skip. You know what I mean? So to find, and if it's a decent block, and this one wasn't too bad. But again, you got to think about all that stuff, right? Because you want to attract the right person. Right? I was thinking about Section 8, but Section 8 takes a little bit longer with the process. I just hustled, and we got 2 cash paying tenants. They were great tenants. It worked out. It helped to just have kind of a clean slate where the property was vacant. So now that tenant, they're coming onto your turf. Now it's not like me, I bought it, now I'm coming and they're already there. Sometimes you can't, you can't avoid that, but it helped, especially as a beginner, where I kind of got to wipe the slate clean and set the rules and set the tone from the beginning. And they're coming in, and now I'm giving them a lease to sign and so forth, and setting the boundaries right away. So now we rehabbed it, we stabilized it. Now it's we got tenants in place, rules are set up. I was also, because it was small enough and I wanted to experience it, I was also managing it. So I was getting those calls at 10, 11 a.m. Hey, listen, this isn't working or whatever. You got to take that. You got to deal with that. Until I was able to get a local handyman in the area, again, using your team. And how did I find him? From a local contractor that was helping us with some things. Because remember, I'm not handy. I'm not a contractor. But I take the calls, because if I'm gonna take the check, I gotta take the calls. You gotta be a pro at this. So it's fine. So, and then you start putting it all together. You start figuring out, okay, this is how we do this is how we do that, fine. So now we get into position for the refinance. And the whole process from buying it to the point that we closed on it late May 2019, and we refied in October, so 5 months. It appraised, we bought it about 160, it appraised at like 270. So I was able to cover it and pull out a little bit of money and use it towards the next deal. So it was fine, you know, it wasn't what people call a home run, but it was good because now it's your proof of concept, right? Now you did it. Now I did it, and I was involved in each aspect of it, and that's important. Whether and I'm gonna tell you another thing, if you're busy with work, with school, so forth, then make sure that you're teaming up with someone who can do those things. Don't purchase a property and not stay on top of the process. It's really, really important to do that because, again, you sign on that loan, that's you. That's you. You have to stay on top of that. Contractors are, they're a certain way. You got to stay on top of them without turning them off. You know, you got it. As soon as the property was done, I would say like 85, 90%, it was done enough. Start advertising those units. Because a lot of people they won't be able to come in and see it if it's like at 50, 60%. Oh, it's messy. Like, they can't see it. A lot of people can't see it. That's something I learned as an agent. But if it's at 70, 80, 85%, meaning the rehab is about done, people can kind of see it. Oh, okay, all right, no, I see it. Yeah, and it'll be done in about 2 weeks. But just get the advertising going, because from my experience as an agent, sometimes it takes a little bit of time for that listing to get rolling. You know what I mean? So you might get on day 1, day 2, you might get somebody and it's a layup right away. But it sometimes takes time to get that traction. So advertise right away. So, you know, like I said, we did Zillow, and then we did the old, you know, the sign in the window, and it helped. It was on a fairly busy block. So now you do the refinance, right? So now we talked about getting the deal, construction, getting the deal, having a team in place, construction, management, and then your exit. You have to know what your exit is. What you really should be thinking about that before you even pull the trigger on the deal. Why am I looking to buy this property? What am I looking to do here? Am I looking to hold on to this? Maybe I'm retired. Maybe I just want to use this, hold on to it for the foreseeable future. Use it, which a lot of people do. They use it as part of their retirement. Some people, you know, they're working towards something. They want some extra income. Maybe you're working with someone. You're trying to partner with a relative, a friend, to give them something to do, get them focused on something. There's people there's grown-ups that they have their children, you know, young adults, get them involved in something positive, get them working on something, kind of like a family business. So whatever it is, but you want to have the exit in mind. What is the exit in mind, right? So, because now, fast forward, and for me, my exit was to just hold on to it, build a portfolio. So we bought another property in Patterson that I was managing for a relative, and keeping an eye on the market, So now fast forward, it was fall of 2020. So now we've had this property for over a year. Cash run got through the COVID stuff, had to deal with that. And I'll tell you real quick with that, I get calls, hey Fabian, I was let go from my job, this and that, I'm not gonna be able to pay rent, fine, okay, let's set up a plan, right? Always have a plan, always answer your phone, always communicate with people, right? If not you, someone on your team. That's very important, because when COVID hit, that was new territory for everybody. But you can't run away from it. You got to face it. So we had a plan in place, you know, a payment plan, see what we could do. In the end, it worked out. But I even in Patterson, they told me, listen, because it's Patterson, it's not a population that is going to have like great credit stuff. Like, collect a month and a half security, protect yourself. So what I did was, when COVID hit, that half month of security, I gave it back to the tenants to help them out during COVID, and I just kept a month of security. So just to help them out, because it was really uncharted territory for everybody, right? So always be flexible, always always know that you better have a plan for things, or be ready to figure it out, but communicate with people, because things are going to happen. If nothing else, COVID taught us that. So now, fall of 2020, I'm just looking on deals. I'm searching online, and I see a property 2 doors down from ours in Patterson. Properties being listed for like $380, and it's a 2-family, renovated 2-family. I call the listing agent. Hey, listen, yeah, I see this. I own a property 2 doors up from you guys. Can we stay in contact? Let me know what it appraises for, because you could list something for whatever you want. As we know, what is it going to appraise for, though? Unless the buyer's waiving, the appraisal, right? Contingency. Sure enough, she comes back. No, yeah, it appraised for $370, and it sold for $374, I think, something like that. As soon as she told me what it appraised for, I called the same, because you want to do the right thing, right? The person that helps you, you want to look out. Same realtor that helped us get the deal. AD, we want to list this property. Because sometimes you can't, sometimes if, you know how you're on the road and you see your exit, okay, here's my exit, I'm over here on the far left, let me get over to the right, because I see my exit, yeah, let me just take it. That's what it is. So we had made money, obviously, with rental incomes, there's tax benefits, so forth. I got my feet wet, as my brother likes to say. It was a small enough deal, right? Made mistakes, but when you're in a smaller property, those small mistakes are not headaches. That same mistake that I may have made on a 2-unit, if I try to leap and do a 20-unit deal and I don't know what the hell I'm doing, that $1,000 mistake could be a $10,000 mistake. Does that make sense? So I started small, got my feet wet, took my lumps, I tell you, I'll keep it it is what it is. We're fixing up the property. The rehab was like 85% done. I didn't have it secured enough. They got me for the water heaters. You know what I'm saying? I had to put a watching man in the basement, meaning a guy that we paid overnight. Stay here overnight. If anything happens, call the cops. You know what I'm saying? Because it is what it is. Because people see that house has been vacant for a long time. Now they've been fixing it. There's money in that house. The water heaters, so forth, the cop, you know what I mean? It is what it is. Until we got tenants in place. Just certain things, real world things, investing in the hood that a lot of people don't talk about. You got to take care of your investment. Sometimes that means, and I didn't have the plates on there. I didn't think about that. I didn't put that. I didn't factor that into the steel plates over the windows and doors. I didn't factor it in. But I learned. You know what I'm saying? I had to pay for the water heaters twice. But it is what it is. Anyway, so now we fast forward, and now we sell we sold it. We sold the property for $360 with tenants in place and everything, and now took that money and now did the same thing, but now invested in commercial multifamily. So now I'm just doing the same thing. Now I took that money from the Patterson 2-family and bought a 6-unit. Just doing the same thing. Now obviously for that, I have a property management company in place. So what it is just taking steps. And I can tell you, for us to get to where we want to be, it's going to take a better, newer version of ourselves. But we're going to have to take that leap, right? Doesn't mean you take a leap. Everybody says, "Oh, take a leap." You don't do it blindly. Maybe you take a little step. All right, you know what? I don't want to. Let me just take a step here. Let me get this 2-family. All right, maybe get another 2-family right now, and then you progress from there, and you take the steps that you can that work for you. Again, everyone's stomach, everyone can take something, everyone's stomach is a little bit different than others. Some people, they could do a ground up construction from the get-go. Maybe they have the experience or they have the team around them that gives them the confidence they can do that. So you got to think about that. Do what works for you. Do what works for you. Maybe it's more education. Maybe it's JVing with somebody. You know, that's a great way to learn. JV is joint venture. Hey, listen, I don't have the know-how, I don't have the capital, but I have time. I can spend the evenings and weekends. We can partner, we can take a look. You know, that's fine. That's fine. Because everyone can provide value in some way, but it comes down to the intent of that person, right? And what can you bring to the table? What can you bring to the table? That's really important. So, you know, before I close out, I just want to say that, and again, I want to thank Anthony for having me on. This has been amazing. You know, like I said, I'm a local guy, and what I've been working on the last couple months is just kind of, I gave you, during my talk, I gave you kind of an abbreviated case study of this first deal that Patterson two-family. You know, we're working on more commercial deals right now and so forth. Just growing. I'm just a guy that took action. I'm not. I haven't even reached my full potential yet. I'm still working, just like all of us are. But what I've done is I've taken the time to just create something that kind of takes a brand new investor from the beginning to the very end, meaning from finding the deal, how to find the deal, how to put a team together, specifically around residential multifamily, because that's where I got my start. And I tell you, there's no better feeling to know that you have an asset that's providing you cash flow, and no matter what's going on, whether it's rainy, sunny, whether you're here, there, whatever you're doing, you have an asset that's providing you cash flow that's providing affordable housing. That's really important. As I said earlier, affordable housing is one of the most important things right now, I would say, in this world. Because even worldwide, if you look at real estate news abroad, there are a lot of people that are moving from the States and they're moving abroad, and they're driving up the prices over there. I heard in Portugal, there's people up in arms because a lot of Americans are moving to Portugal and I'm sure other countries, and they're driving up the prices because what's expensive for them is cheap for an American. So you know, it's just, so there's just this constant squeeze. It's just this constant squeeze that's happening. But it's best that, again, if rentals is something that you want to get into, it's a great way to build cash flow, to work with people. Maybe, you know, I was able to help a relative of mine who has a really great job use the FHA loan to buy his first rental, and I managed it for him because by then I had that experience. So I was telling him, hey, listen, we got to do this, we got to do that. You know, I already knew, and it was in Patterson, so I kind of already knew Patterson to an extent. I could tap those resources from my team to help us with certain things. So just before I close out, I just want to let you know, I have this program. It's called Unlimited Multifamily Deals that just takes the brand new investor from the beginning to the end, just understanding the whole process, and you get to, you know, we work one-on-one. If you're interested in learning more about it, you can, I mean, I'll be around throughout the day, so during a break, so forth, we can talk. You know, if you have any questions, so far, you know, more than happy to help. Again, I want to thank Anthony for, I got a few minutes?
No, I got a question for you.
Okay, cool, yes.
So my question is, when you transition from two families going to commercial multifamily, how was that transition? How was the evaluation? Because I know it's a lot of newer people in the room. So with residential, it's a lot of sales comparisons, right? Like when you evaluate property, you got appraisals. How was that transition going from net operating income? How was it cap rates? How was that, you know, synergy as far as commercial? Like, can you talk about that evaluation portion?
Yes, sure. So as you heard earlier, when we listed that two-family house, the example I gave, and this is what really happened, it was based off of the property 2 doors down, because with residential, they go off of what's called comps, right? Comparable sales, right? So, you know, this 2-unit, all right, they're gonna look at other 2 units, ideally within a mile circumference. This one happened to be on the same block, so it was easy. and usually, the sales within the last year. So that's how they do it. In commercial, excuse me, commercial is 5 units and up, right? That's considered commercial. It's essentially, a 2-unit is 2. Commercial it's a business. It's a business. And with commercial real estate, commercial multifamily, they're gonna look at what is that property earning. Sure, they'll look at, okay, Fabian, you're looking at this 6-unit. All right, we could take a look at what are other 6 units in the area similar. What did they sell for? Not what did they go for, what did they sell for? Just to kind of give us a range. But for a lender, for them to finance it and that valuation is really going to be based on what is that worth? What is that, for example, as a 6-unit, what is that property worth, right? And the way they look at that is they're going to look at what is it cash flowing, right? What is it cash flowing? What is that net operating income? So you think about, for example, property that we have, a 6-unit in Chicago, it's grossing just over $6,000. So that lender's going to take a look at that based on that number, market rents, based on that number, they're going to do their calculations. Hey, based on this is the valuation that we'll give it, right? So when you think about commercial real estate, that's the valuation. It's not so much about what the property down the road is, even if it's the same size or whatever. It's commercial real estate is about what's it making, because it's producing money, it's producing income. But obviously with a residential multifamily property, 2-3 unit, it's producing income as well. But with commercial, it's a different category. It's a different category, if that makes sense. Right? Any other questions from anyone? So again, in closing, guys, I just want to thank you for your time. I'll be around. If you have any questions, you can come up. You can also, if you want to take down my email and reach out afterwards, it's Fabian at FabianBaez.com, and that's Fabian at Fabian, FabianBaez.com. But again, I'll be around throughout the day. I appreciate your time. Anything that I can do for you, please reach out. Again, I want to thank you. Let's give Anthony a hand again. Great job putting this on. And I look forward to speaking with you guys during the course of this wonderful event. First of all, you got to have your expenses, so you got a mortgage on it. The mortgage is now you're at, what is that, $4,200. Now you have to pay your management company, because that's in Chicago. I'm not there. I have a management company, and even if it were in Jersey, I would have a management company. Because why? Because now it's a bigger asset, and I need help. With the 2-unit, it's more manageable, and I'm a half hour away. So now you got to factor that in. I was told property management, they're gonna charge you like 5%. No, they're not. Not on commercial. They're going to charge you 10%. So it comes out to like roughly, they're going to charge you about $100 a unit. That's what they charge. And not to mention, so $100 a unit, so they're getting $600, because it's a 6-unit, $600 a month. That's their base. Not to mention other expenses, because they do maintenance. There's trash, so forth. So you think about all of that. So you factor all of that in, and then I get a statement. Actually, I'm going to get probably like beginning of next week. I'll get the statement for the month. So now, after all of that's broken down, and then I pay the mortgage, on this, the cash flow, meaning what's left after you pay the mortgage, after you pay your expenses, that's your cash flow, right? That's the net operating income is what you get, But then after you pay your mortgage, and the mortgage also includes taxes, insurance, all that stuff. Now after what's left from that, because you got to pay your mortgage, whatever's left, that's the cash flow. That's why it's really important that you find a balance between bringing the rents to market, not getting crazy, but bringing them to market as best to market rent while keeping them affordable. Try not to be greedy, right? Get them to a market rate, because why? Because you're gonna have to pay that mortgage, and you're gonna have expenses. And not to mention too, you will have to have reserves. So on our property, it's $500 per unit reserve. So that means that every month there needs to be $3,000. So 6 times 500, $3,000 on hand. So apartment 2 over here, we had an issue, we had to fix it, that was $400. So guess what now? Now when that next rent money comes in, $400 is not gonna go into my pocket, it's gonna have to go to reserves, because that's gotta be there, and that's something that all property management does. So this way, if little things here and there happen, instead of them calling me, that money's there already set aside, dedicated to that. So that's really important. That's another part. And actually, that even brings up a point. Even with the 2-family, I realized, hey, wait a minute, I can't pocket all this money. I need to keep a couple hundred at least to the side for that purpose, because things are going to happen. Hey, Fabian, the toilet got stopped up. Hey, Fabian, the something's up with the stove, or my knob is loose. It takes money to keep these properties operating, so I just keep a little bit of money to the side. Don't eat it all, don't pocket it all. Keep, running a business, keep that money, keep some money to the side. But with the property management, they're going to do that. So keep that. That's very important. And this is why when we talk about running the numbers, especially with commercial assets, you got to make sure, like we're looking at bigger buildings now, that how much is it making now? What's it going to cost? What now with these higher rates? What's that going to cost? Is this owner going to take a little bit less? Because now, I was talking to Matt earlier, the cost of capital went up. So that's what I'm seeing now. The deal that was possibly working even the beginning of this month, it doesn't work now, because now the rates are higher. And if that seller is not gonna, hey, listen, can you work with me here? Would you take less? Oh no, I'm not gonna do that. Well, I'm gonna have to walk. This is why you also want to make sure, I don't mean to go off, but also make sure, never ever, make sure when you put a deposit down, make sure that it's refundable. Listen, everybody says the same thing. Oh, act fast, it won't last, this and that. Oh, not refundable. Listen, bro. Oh, it's Baez is. Fuck Baez is. Pardon my language. We're still doing due diligence. I'm still doing the inspection. I don't care, bro. Have your contingency. This is why you have an attorney. Do not buy real estate without an attorney, and that attorney has to be on your side and know what they're doing. A real estate attorney that's done those kinds of deals, right? Make sure you have that contingency. Make sure it's a refundable, within a given time, right? You can't be in day 100 and now you want to get your deposit back. You have to have that contingency so that if that inspection, if you're not sure, or you're not certain, you're scared, you're not sure you can get financing, you could back out and get your deposit back. Don't let anybody try to twist your arm. There's a lot of sharks out there too. I'm gonna let you know. There's a lot of people that try to get over on people. I'm sorry, you had a question, man?
Yes, it's probably 2 questions, but I'll make it quick. The 6,000 gross is at full occupancy, right?
Right.
And those are also at market value, or
Market slightly. A couple of them are slightly below, because there were 2 tenants. That's a great question. There were 2 tenants that were already in the property when we bought it.
So then your gross will increase once you complete.
Exactly. Okay. Or in due time, as it's time to obviously for them to renew.
Okay.
Yeah.
And then the second question is the property, because I agree. I know it's whatever works for whoever, but I don't feel like you need a property manager for like a 2 or 3. Like I had a 3. And I'm like, I'm gonna just do this shit myself, because I'm not paying someone. And it's better to be hands-on, but I agree, like maybe like a 5 and above, it's a different type. But how do you manage your property managers? I had a friend who I convinced her to like get into buying and holding, and they got a property manager, but it was a 3, and I told them, you don't need one for a 3. And they went against it, and then he was shitty, and they're paying him 10% for a 3 every month. So how do you manage your property managers?
What I do first and foremost is, and that's a great question, what I recommend is anybody that's going to work with you. So for example, I'll give you that property manager, the management company that we have in Chicago. Right away, let's say his name is John. John, listen, obviously I see you guys have this company, property management company. I want to see if this could be a fit. do you have maybe 2-3 references, 2-3 owners that you're currently working with now who I can call and find out how you've been with them?
Right.
And that's what I did. Not to say that John is a bad property manager, but I just need to know, because it's my baby. That's my property. Again, it's a property that I'm on the hook for. I want to make sure that the person helping me, or the company helping me, that they're going to be on point with what they're doing. So I did that. With the smaller properties, listen, if you're busy with stuff and you can't, it's fine, but you have to get someone vetted. Hey, John, your product, great. Share, if you wouldn't mind, share a couple contacts of owners that you're working with or that you've worked with to get some feedback, to get a reference.
But do you meet with them like monthly? Like,
So what I do is they send me statements, and actually it's a great point. There was a statement, I caught something in the statement. You go over each month, they send you a statement of everything, where every dollar went to. It's like, wait a minute, where's the rent for apartment so and so?
Right.
And there was an accounting mistake. So I brought it up, and I'm good about emailing and CCing everyone that needs to be CC'd and staying on top of it. And they apologize. And now I was telling Anthony, you know, I'm actually, I just mentioned it right here. Very soon, I'm gonna get the statement for June. You best believe I will be going through that with a fine-tooth comb, because no one cares about your business more than you do. So it really is, no, let me put down my phone, let me look and really go through everything. Not that they're trying to get me, but it's business and it's human error. Make sure. And guys, this is business. You're a professional. Do not be afraid ever to email, follow up. I follow up my own follow up. Hey, Randy, I emailed you. I'm on the phone. I emailed you 2 days ago. Haven't heard back. Yeah, just touching base about XYZ. Follow up. Ask questions, because you're doing it in a professional manner. You got to do that. No one is going to care more about your business than you will. So follow up, ask questions, get referrals. I'm in a new market, and then as you build your team, you leverage your team. That's a really important thing. Leverage your team. Hey, you know, maybe this attorney who's also an investor. Oh, wow, you have multifamily too. Hey, listen, you have property management companies you'd recommend? Sure, yeah. And that's how I got that property manager. But then once I got on the phone with them, I still went ahead. Hey, listen, John, can you share a couple owners, you know, that you work with, and just get, now, could they be lying? Yeah, they could. They could be putting on an ad, but I got to do it, and then I got to test them and see. And they're on top of this stuff. And this, you know, we've been working now for about a year, and they're pretty good. So, you know, and if they're not, you know, I'm not stuck on a contract with them. I replace them.
Right.
You know what I'm saying? Do what works for you. Ma'am, you had a question?
Yes. When you make your deposit, you know, it's very difficult to get a refund. You saying, you know, with your attorney, it's, you know.
Before when you go to contract though, are you working on residential multifamily or flips, or does
Residential.
So when you have a property that you're looking to buy, obviously you have your attorney in place. Before you guys, you know, there's obviously attorney review period, right? You have time. It's not like, okay, you saw this property today, okay, hey, later today or Monday, I expect that wire for the 5K or whatever it is that they're asking. You have a little bit of time. So make sure, double check with your attorney, because you don't need to, you know, make sure that on that contract, send it to your attorney and make sure that, because remember, attorney review is really important because they're reviewing that language on the contract. Everybody has a boilerplate, like a standard contract that they could use, but remember, there's two sides to this transaction. So let's say if I'm the seller, I send you, I want to send it, you want to send it to your attorney, have your attorney review it, and okay, what's your name, man? Shalise. So Shalise, okay, let's say I'm your attorney. Okay, Shalise, give me a day, give me an hour. We're gonna go through this contract. Make sure, who's the attorney, right? The attorney is going to want to know who the buyer attorney is, right? Attorneys want to be working with other attorneys and make sure and get on the same page. That's really important. Don't ever feel pressured. Make sure that is in there, that you have an inspection contingency, you have a financing contingency, so that if this doesn't work out, you can back out and get your money back.
But it has to be within the time frame.
It has to be within the time frame.
Terms, there's always
Right.
terms in the
And
contract.
this is why, and like, right, and like I said, like we know here, we're all grown-ups. Real estate is grown-up business. You can't come in here playing around. Oh yeah, I'll get the money. Yeah, and you playing around and not returning. No, it's grown-up business. So you have a time frame. You got whatever it is, those 10 days to get that inspection done. You got to get it. You got to get it done. So but make sure you speak with your attorney and get on the same page.
Are there ever any cases where the money's placed in escrow instead of
No, a lot of times.
The seller's hand,
No, it shouldn't be. It shouldn't be in the. It should be in the attorney. It should be in the.
Escrow account.
Right,
Okay.
right, because the deal isn't finalized yet. You know what I mean? So it stays there, and if it doesn't work out, it should be released back. Hopefully that helps. Yeah. All right. Cool. Any other questions? All right.
Real quick. Fabian, fix a quick question. Do you ever do anything with like that might have like a septic tank versus like, because there was like I recently quit. I sold my property to do real estate full time because I just hate like working. So I did that, and then looking to like to do fix and flips, and I have the financing, everything in order. So I saw a property in Hillsborough. It was listed at 189 like 98 days ago. It's now down to 116, and like the comps are like 4 and up. But I know the rates are up, so it's like be more conservative. So let's say high threes. But there's a septic, and it's like it keeps going back on market. So it's like maybe it has like a septic issue. But do you like stay away from certain things? Like I'm absolutely not.
That goes back to, I haven't done flips. My experience has been with the multifamily, but
right.
what I would say is you got to look at, and there's a reason. If it's still available on and off like that, there's obviously a reason with it, because you got to see, right, if you're gonna make that change and renovate that and get that out, there's who knows the price tag for that.
Right.
So you got to, so as an investor, you got to see what can you stomach. Like if you see fire damage, man, I don't really want to deal with that. Just walk away from it. Other people, oh yeah, that doesn't scare me. I'm going to build it up anyway. You know what I'm saying? So as an investor, as an individual investor, you got to see what can you stomach, what can you deal with and not deal with,
Okay.
and then go from that.
But would someone come out to give you a quote? So like
Oh yeah, if you,
septic, like
yeah, I mean, yeah, absolutely, and that takes nothing. That takes
Right.
nothing, because they're in the business. They need
Right.
more clients, so you can definitely go ahead and take a look. If nothing else, just for the education of it.
Right.
I've been to, I'm sure everybody here has been to more properties than they've probably bought.
Right.
If nothing else, you're gonna walk away with a lot more information. Hey, listen, Andy, what do you think? What do you think? How much is this gonna cost? You know what I'm saying? Just so you know. Could you do it? Could you not do it? Is it, you know what I mean?
Right.
So that's absolutely. Yeah. All right.
Sorry, last
Go
question. You got one more?
All right. Okay. All right. Well, I'll be around. I'll be around. Yep. Thanks again, guys.
Thank you.